What's up, y'all? This is Lewis Scott here. I want to make a quick video to show you what to look for when you're comparing um, different investments. Because I had somebody who was looking to invest in a Roth IRA, and we're coming towards the end of the year, and you really have until April tax day of next year to fund your Roth IRA for this year. And you can either fund your Roth IRA or a traditional IRA, depending on which one fits you. And so you can go and learn the difference between the two and see what fits your tax situation. But the person went to a professional, and this is the fund that the professional gave them to invest in. And as you see here in the summary, it says it's a balanced approach to growth and income investing. So they asked me about it, and I said, did you look at the fees and your expenses? And they didn't know anything about that, which is why I'm making this video. So I want you to really truly be able to compare investments from different companies, from different brokers, so that you can really see what the funds, or we see what the expenses are, because the expenses are really going to cut into the performance. And if the fees are cutting into the performance, the fees are going to cut into how your funds are going to grow. Okay. So you get your summary here. You're going to click on returns, and you see your returns here for 1 year, 3 years, 5 years, 10 years. And what's critical right now, the situation that we're in right now, is it doesn't show back in 2008. It shows we had a huge downturn in 2008. And so we've already passed 10 years. And so that doesn't show in here. So right now, all this performance looks great. Okay. Even right here, since inception, it goes back to 1975. So, and there was a lot of downturns in there, but you really want to see that in order to compare. Okay. You want to click on holdings, and this is where you're going to get the breakdown of what you're invested in. And it has the equity breakdown and the bond breakdown. Okay. So you're going to have government bonds, U.S. government, and corporate bonds, U.S. government, agency bonds, notes, and then it's going to have the top fixed income issuers. So U.S. Treasuries, Fannie Mae. So you really get to see what you're invested in, which is critical. You really need to know this information. But let's go back down to the breakdown of the equities. So you know what industries you're in. So these are going to be all your industries over here. And then these are going to be all your top equities. If you go deeper in the prospectus, you'll be able to see all the companies that are in this fund. Okay. Next thing we're going to go to is the fees. Now, as you notice, there are a bunch of other tabs up here that you can go to, but I really want to keep this video short. And so here we're going to go to the fees. The annual management fee, 0.22. Other expenses, 0.14. Service, 12B1, 1%. And so your expense ratio, which is a key industry term, you always want to know what your expense ratio is. Like when they first brought and mentioned this investment to me, first time I asked, what are your expenses? for the fees, because sometimes you will be charged fees in addition to the expense ratio. And so you're looking at 1.36. So that's going to be coming out of the performance. Okay. Now let's go over to Charles Schwab. They have a Charles Schwab account, and they can go to Charles Schwab and get a balanced fund from Charles Schwab. So now we found a balanced fund from Charles Schwab, similar to the same thing that they were offered from American Funds. Let's take a look at, I wanted to go, okay, here we go. The summary. We'll come back to the fund facts and fees. So we start out at the summary for Charles Schwab. And then down here it tells you what the strategy is for the fund. Okay. So it's pretty comparable to that one from American Funds. Let's go to the performance. The performance for 1 year, 13%, 3 years, 9%, 5 years, 6%, 10 years, 8%. Kind of comparable. Now, you'll be able to find other funds that are much closer to the one in the, because every company is going to have a lot of different balanced funds. They're not going to have one balanced fund. They're going to have a lot of balanced funds, and you just have to go through the summary and find out which one fits you, which one has the best potential to get to the goals that you want, in addition to that fits your risk tolerance. You click on the portfolio. And you'll get the breakdown like what we saw with the American funds in the different sectors that it's invested in. And for the bond side of it, it's going to give you the breakdown over here. Again, it's very important for you to know what your fund is invested in. And then now we're going to get to the nitty gritty, the fund facts and the fees. Now remember, over at America Funds, we're being charged 1.36%. Over here, this is what your gross expense ratio and then your net expense ratio. Okay, and that's if you qualify for any waivers or reductions. That's why they have these two different. So either you'll be charged this or you'll be charged that. But that's less than the 1.36. Okay, so you always want to go with a discount broker like Charles Schwab, Vanguard, or Fidelity. I prefer Vanguard. Vanguard is what I call the big daddy of them all, and their fees are much lower. And you're going to find out because we're going to take a look at a Vanguard one. I wasn't going to pull up a Vanguard one, but I did it anyway, just so you can see. Okay, so let's go take a look at Vanguard. And then the same thing. You got your overview. You're going to have the performance. So you have the performance. And then we're going to go to fees. And I'm going through this much faster here because it's the same thing no matter what company's funds you're looking at. It's all going to be the same. The only thing different is the type of investments may be different. They're going to have companies. They're going to be different. They may have the same companies, but they're going to have a different percentage invested in those particular companies. But look at here, the expenses, 0.07%. Okay, so we went from 0.136% to 0.54% to 0.07%. And this is going to have a huge impact. And as you show here, Vanguard is giving you a comparison. The average expense ratio of similar funds is 0.82. So, but this 0.07, that's money that you're not overspending on. That's money that's staying in your account to constantly compound. And you have to have that compounding effect in order to reach your goals. Whatever the goals you have for your investing, you're not going to reach it by paying more than you have to. And I don't want anybody paying more than they have to. Okay? There's too many investment vehicles out there, and they're all pretty much similar. The only difference is going to be is how much you're going to spend and expenses. Okay? And that person that introduced her to the American funds, I told her to go back and ask them, do they have anything from Charles Schwab or Fidelity or Vanguard? And you know what they said? Who are you, Clark Howard? Now, if you don't know who Clark Howard is, Clark Howard has a radio show. He talks about consumer empowerment. He talks about investing. And so he said it as like a little smart aleck thing. So if you're not going to offer people an investment that's for their future, don't offer them anything at all. But I understand the guy has to make a living, but whatever. So that's how you compare investments. Okay, I hope you get something out of this video. I'm gonna put a link down here below in the description, or if this is on Facebook, down in the comments. It's going to take you to a video who's going to go more in depth, and he can give you some rock solid numbers on how reducing your expenses and keeping your expenses low will help fund your retirement, will help you reach the goals that you want to reach. Because it makes no sense to be paying these fees if you don't have to. All right. So y'all have a great one.